Amy Wu Silverman is head of derivatives strategy at RBC Capital Markets. So good morning. It's good to see you.
Good morning.
So here we are again, development in the chip and memory space overnight. As Joe was saying earlier, the three indices are kind of diverging lately. What's all of it saying to you? What's your read on things?
It's interesting when we look at what the options market has been pricing. I think, there hasn't been that much angst on the surface, but we've talked a lot about this idea of the paddling duck. So essentially, there's a lot going on underneath the surface. And one of the major things that was going on was this angst about a potential change in leadership. So you can call that semis versus software, chips versus hyperscalers. But fundamentally, to me, Kelly, it's about a change in momentum. So momentum was winning, and now we're really getting this flagging down in momentum, TIMT momentum down, kind of multi-standard deviations versus history.
So I have a question about momentum, because we've seen some of these data points coming into the week where Goldman's momentum basket was down 24% peak to trough. They say that that's the biggest in about 5 years or something, and typically it's paid off to buy. But what's in the momentum basket kind of right now? I mean, are they one and the same to talk about the chip trade and the memory trade? And that seem to be used euphemistically with one another.
Yeah, it's such a great question, and it's really important that I think people are very precise about that, because the reality is when you look at a technical definition of momentum, momentum is just winners continue to win.
Right.
That's the academic thought process behind momentum. So while it is technically true that when you look at the stocks that have been winning, it's going to be your chips, right? But technically, healthcare could be momentum in the sense that it's also been doing well. When people say we're going from momentum maybe to anti-momentum, essentially what they're saying is the new leaders may become the laggards, and then the laggards may become the leaders. That tends to fall into sectoral buckets, but you do have to be really precise because that's not the technical definition of momentum.
So I'll borrow the Ardeni framing, is it a rotation or a market kind of breakdown?
I think it is more a rotation, and that's why we continue to have this index level volatility be fairly subdued. You think about the VIX, it's really stayed under that 20 handle. But when you look at, for instance, implied volatility in semis or implied volatility in single stocks, they're massive, historically high. You don't see that because you get the zigging and the zagging, you get that canceling out. However, if you're someone who's on a sectoral basis going into certain places, that doesn't help you, right? You're still going to feel those multi-standard deviation moves. I think the market really now wants to find new leadership, and that new leadership hopefully could mean a broadening of the market.
Yeah, it's so easy to understand a leadership narrative that's built around memory chips and, important components of the AI trade that are experiencing a once-in-a-lifetime increase in price and demand. It's harder to see it in the healthcare space, even though it may be true what's going on with biotech this year. Look at the 50% year to date. Industrials, I think, was actually the best sector as of a week ago or something like that. So there's just not as strong a narrative there. The AI one is just so much more obvious, but it would make sense that it has to be kind of shifting or giving way at some point.
Yeah, and I think part of that is, I remember when I was here to talk about our 2026 volatility outlook, one of the tenors was basically this idea that if AI really is going to do what it say it's going to do, it should at some point lead to the other sectors, meaning like we have all this spend, we have all this CapEx. What is it for at the end of the day? Hopefully It's for something novel in different sectors. But it is interesting because when you just simply look at the stack of how things have done, you have actually seen healthcare do really well. You've seen certain parts of industrials, defensives, people call them the halo names. They've actually done really well, too. Even IWM, that's actually the best performer, relative to S&P, Qs, and IWM. It's actually IWM that's had 20% up year to date. I think that gets lost when we talk about narrative, because narrative tends to take you back to chips and compute. But those also have been doing quite strongly. And again, that's why it could fall into the momentum basket.